Thank you, sir. Good evening, students. Not able to download the assignment. Okay. Good evening, students. Welcome to the important topic on input tax credit. We have discussed the other provisions of supply exemptions and various other provisions. So today we'll discuss on what is the input tax credit, which are the provisions which are being left out, and one minute. Okay. So we were discussing on input tax credit. We understood how to take the credit, what is blocked credit, what happens when you can claim the credit, and what are the documents which is required to claim the credit, and what are the essential conditions, 4 essential conditions, other 3 provisions which are relevant for taking of input tax credit. We have discussed this, right? So good evening again for people who have joined in now. So many people joining in. Last class we had discussed, and it was only a concise class on what has to be discussed, and we just limited it because of the technical issues. Today we'll cover up the complete chapter of input tax credit, which has been missed out, and we will also take up some questions so that your understanding on the theoretical aspects can be further strengthened. Okay. Okay, so let's discuss on, just take a kind of short recapitulation of what we did last class, and then we'll start with present class. So we had discussed how input tax credit can be taken and what are the various conditions. So we were discussing on this eligibility for conditions for taking credit, 4 conditions, and other 3 conditions for capital goods, when you should make the payment. Those things we had discussed. Apportionment of credit and block credit. So we had understood what is a block credit and what credit we should not take. Availability of credit in certain special circumstances, we had understood this also. Then taking of credit in respect of inputs and capital goods, we will learn, and we will further understand section 18 and manner of recovery of credit distributed in excess. So basically we'll understand what is relevant for your portions. So block credit, we had understood on saying that what all credits are blocked: vehicles, planes, and ships. Basically vessels, planes, and vehicles are block credit. Then what is the credit? Food and beverages, outdoor catering services, beauty treatment, healthcare services, cosmetic and plastic surgery, life insurance and health insurance. These are all blocked. What else is blocked? Membership of a club, fitness center, travel benefits extended to employees on vacation, such as leave or home travel concession, then works contract services for construction of an immobile property. Okay, these are all restricted credits. Okay. What else? What else credit is restricted? Plant and machinery is permitted. So in terms of works contract, we had seen that works contract is restricted, but works contract for construction of plant and machinery is permitted credit. Plant and machinery definition we understood. Then construction of an immovable property on own account is also restricted. Okay. Then inward supplies charged to tax under composition levy, that is restricted. When a composition supplier charges you GST, he should not charge. Even if he charges, you cannot claim the credit. Inward supply received by a non-resident taxable person. For that non-resident taxable person, he cannot claim the credit. Any goods or services which are using for personal consumption, on that credit is not available. And very important, goods which has been lost, which has been stolen, which has been destroyed, or that is written off or given off by way of gift, a free sample, that is also restricted. Then when you pay taxes, when you've done a fraud and you pay taxes, or there's any detention and confiscation for which you have to pay taxes and release the goods, on that also GST credit is not available. Then what we understand, special circumstances based on circulars. Then we had understood section 18. What happens, what credit you can claim when you move from when you take a new registration, when you take a voluntary registration. What happens when you move from switching from composition scheme to regular scheme? then what happens when your goods which were exempt is become taxable now? Okay, so before proceeding to further thing, let's take up some questions what students have basically. On destroying the medicines, manufacturer reverse the ITC, correct? My question is, so we said that what happens in case of goods destroyed, then the credit has to be reversed. My question is, if there is no sufficient balance of ITC to reverse, that is, if he has already used the ITC claim for payment of tax, how would he deal in such a situation? So reverse the ITC if ITC is available. If ITC he does not have that much sufficient balance, then he has to pay as output tax. So either reverse the ITC if ITC is not available, then pay the output tax. Okay. Exemption chapter, bank service, exemption number 35 and 33, when the penal interest included in the value and when it is exempted. So if there's any interest charges, then it is an exempt thing. But if they charge any penal interest, so in exemption, we saw that banks, when they charge interest, that is exempted. But when they charge any penal interest, that is not exempted, that is taxable. Okay. Sir, यहाँ पे questions are getting interchanged. I'm seeing questions of other classes also popping up here. But I'm not able to see any questions pertaining to my topic. And today we have question answer sessions and problem solving sessions. So if the correct questions don't come to me, then I'll not be able to take the session. So there are two batches which is going on. Okay. Okay, so we had a discussion on what happens when you move from composition to regular and what happens when you move from exempt to regular supply. Now let's move to this chart was very helpful to understand what all credits you can claim when you have inputs, input services and capital goods. So in all of these, you'll see that input services is not available. Okay, when you're shifting it from old scheme to new scheme, from composition scheme to regular scheme, or you're moving from exempt goods to taxable goods, in all of those cases, input services is not available. All inputs will be available. But capital goods you can claim only in two cases: when you're moving from composition scheme to regular scheme, or when you're moving from exempt supplies to taxable supplies. In a case where you're taking fresh registration, either voluntary registration or when you have to take a compulsory registration, in that case, on capital goods, you cannot claim the credit. Only on your inputs, that is on raw materials lying as such, raw materials lying in semi-finished goods, or raw materials lying in finished goods. Only in those three cases, you can claim the inputs. So you cannot claim the credit of capital goods, and input services is not available in any case. Okay. Now the invoice on which basis you can claim the credit should not be older than 1 year. So any invoice which is lying, you can claim, which is an invoice 1 year preceding this date of event, not prior to that. Okay. And when we do capital goods, claim the credit on capital goods, or we sell any capital goods, on that you should claim a reduction of 5% per quarter. For any assets, yes, for every asset, you have to claim a reduction of 5% per quarter. Doesn't matter whether it's a laptop, doesn't matter whether it is a machinery, for all, the GST has said that the depreciation rate for which basically this 5% is depreciation rate. You have to consider that the reduction of 5% is the depreciation for per quarter. Okay, if it's a part of the quarter, then you'll round it off as a complete quarter. So when we'll work out, you'll get to know how do you do this calculation. Now, 18.4 says when a registered person opt to pay tax under composition. In previous slide, we had seen that when a move from composition to regular scheme, but here we are seeing a case where a registered person moves from registered person to a composition scheme person, and where the taxable supply becomes wholly exempt supply. So reverse case of the previous thing, when a composition dealer, when a registered person moves from normal registration where he could have claimed credit to being a composition dealer, in that case, what happens? And then in a case where a taxable person who is under taxable scheme, his goods becomes exempt, then what happens? What should be done? He shall pay an amount by debit in the electronic credit ledger equivalent to the credit in respect of inputs held in stock. Okay, so whatever is the stock, he has to see what is the stock he's having. Okay, as on the day before he's becoming a composition, before he's registering as a composition scheme, or before the date when he is when his goods are getting exempted. So earlier it was taxable, now it is getting exempted. So when it is exempted, what happens? We know that he cannot claim the credit. We understood that, right? When your output is taxable, then only you can claim credit. In your composition scheme also, you cannot claim the credit. So when you were regular scheme, you were claiming credit. So if you, in both these cases, if any stock is lying, what you should do with that stock? He shall pay an amount by debit in the electronic credit ledger and cash ledger equivalent to the credit in respect of the following things. So he should take the stock on that. What is the input he should calculate? Then he should take inputs contained in work in progress, finished goods, and also capital goods. Okay, on these things, basically on the stock, on the raw materials, finished goods, semi-finished goods, he will take the stock, and also capital goods he will consider, on which he has claimed the credit, and he will have to reverse these credit. If he does not have sufficient credit, then he will have to pay through his cash. So he shall pay an amount by debit in the electronic credit or cash ledger. So if he has sufficient credit in the credit ledger, that's fine. Otherwise, he has to pay it from his cash ledger. So ultimately what he does, he takes the stock. On those stock, if he sold before, then he would have collected higher tax and claimed the credit. But for whatever reasons, if there is some stock and these stock has to be sold under the new scheme, it has to be sold under the exempted rate, or it has to be sold under composition scheme, then credit will not be available, right? So since on the new scheme, credit will not be available, as on the date of this shift, whatever is that stock, on that stock, he has to calculate what is the input tax credit he's claimed. And in case of capital goods, he will have to consider on those capital goods, what is the credit he's claimed, reduced by 5% per quarter, and then he has to pay that to the government. Okay. So reversal of ITC on switching from regular taxpayer to composition levy or from taxable to exempt. Reversal of ITC on inputs. ITC on inputs should be reversed proportionately on the basis of invoice, which means 500 goods I had purchased, 500 quantity of goods. I under regular scheme, when I was there, I have sold 200 quantities. I have claimed credit on the full 500. Why? Because when I purchase, I will not know whether I will go for composition or no. So when I had purchased, I have claimed credit on full 500 quantity of goods. I have sold 200. Now today I'm moving from regular scheme to composition scheme. So what is the stock held with me? 300. On this 300, I have to reverse the credit. So why I've said proportionately? Because I've claimed the credit on full 500. Now I have to reverse in the ratio of 2:5, because 200 divided by 500, that stock has been sold. So I have to 200 and 500, I've paid the tax, sorry. So on the balance 300, which is the stock lying as on today, on this, I cannot claim the credit. So 3 divided by 5 on the value of the credit, what I've claimed, into 3 by 5, I'll have to reverse the credit. Okay. If invoices are not available, saying that, okay, this is a stock line, I'm not able to trace out against which invoice I have brought it, then what do you do? If invoices are not available, ITC can be reversed on the basis of prevailing market rate. So I can find out what is the value of these stock at the prevailing market rate. And if I don't do a reversal through invoice basis and I do on market value basis, then that should be certified by a chartered accountant or a cost accountant. Okay. Again, there's opportunity for you saying that whenever the dealer is moving from regular scheme to composition or moving from taxable and exempt, and his stock, he is not able to identify on basis which invoice is taken. Then we'll have to do a valuation of those stock. How will you do that valuation? You'll see what is the last stock which has been sold. That will be the value of the stock. So you know the market value for that. Based on that market value, you'll certify this is the market value, and you'll calculate the rate of tax on that. You'll say this is the credit which has to be reversed. Okay, so that is how you do a reversal of ITC on inputs, basically on raw materials, and reversal of ITC on capital goods. How will you do? ITC involved in remaining useful life reduced on pro rata basis, taking useful life as 5 years. So 5 years will be treated as the life of the assets, and we'll do the reversal. Debit the electronic credit ledger or electronic cash ledger. ECRL means electronic credit ledger, and ECL means the electronic cash ledger by the amounts as mentioned amount. Okay, so whatever is your credit, say you have 1 lakh credit, based on these calculations, you get a calculation of say 60,000 has to be reversed. So you reverse 60,000 rupees. Okay, if you don't have sufficient balance, say you have only 40,000, then you will reverse 40,000 completely and pay 20,000 by cash through your electronic cash ledger. And then say in my first example of 1 lakh was the credit balance and 60,000 has to be reversed. You have reversed 60,000. What happens to that 40,000? That balance of ITC lying in your electronic ledger shall be lapsed. So you will reverse that also, and the balance also has to be lapsed. So basically, when you're moving from regular taxpayer to composition, your electronic credit ledger should be zeroed out. Do this calculation, pay through your credit ledger whatever has to be paid, and balance also has to be lapsed. Clear? Okay. Pooja Gajab, please check my question. I asked on package, it's seen price included all taxes. So actually we have paid tax. So how can we say supplier or distributor paid tax? Yeah, Pooja Gajar, your question is, in packet of good price as included all tax. Yeah, if the packet is price is all inclusive. Yeah, if it is MRP also, the price is all inclusive, which means we are paying tax along with the value. So they cannot charge you anything about MRP. When it says all inclusive of taxes is included, they will do the calculation and pay that to the government. So we don't have to do a segregation. The supplier will include it when he raises the invoice. In case he does not raise the invoice, then what happens? Then he will do the calculation on his own and he'll pay to the government. Right? So the price will be treated as all inclusive in such case. Okay. Okay. Other question is, if the recipient does not pay within 180 days, what happens? नहीं हुआ sir. Still getting confused. If the recipient does not paid in 180 days, then they have to pay interest at what rate? If they don't pay at within 180 days, then they have to reverse it and pay interest at 18%. Okay, so they have to pay interest at 18%. Okay, so let's move forward. I'm not able to answer all your questions because I'm not able to see all your questions, but I will take this further so that you understand whatever I'm teaching. We'll take up your questions later on if the technical issue gets resolved. Just 1 minute. Okay, so let's proceed. What happens in case of cancellation of registration? So even in case of cancellation of registration, similar to what we had discussed when you move from a regular scheme to composition scheme, even in terms of cancellation, when we cancel the registration, we will be having some stock lying with us. So we have to reverse inputs on the stocks lying with us. So what we have to do, reversal of ITC on inputs, stocks and semi-finished goods and finished goods. Also, we have to do reversal of ITC on capital goods. Okay. We have to calculate this reversal on stock or output tax payable on such goods. So reverse the ITC or output tax payable, whichever is higher, this has to be paid. Okay. So in case of these cases, we don't do a comparison of the output tax because there is nothing like sale. These will be sold at exempted rate, or that is zero rate, or those will be sold at composition rate. So here we don't have to do a comparison, but when we do a cancellation, the registration doesn't exist. We are lapsing a business. So either we will sell it. If you have sold it before the date of cancellation, then no problem because your stock doesn't exist. But if your stock exists as on the date of cancellation, then you'll have to do a comparison between what is the inputs on your raw materials and what is the inputs on your capital goods. Again, the 5% reduction on the capital goods will be there. How do we do that calculation on capital goods? If I have bought an asset, I have claimed the credit of 1 lakh rupees. On 1 lakh rupees, the government has given credit to me with the assumption that you will use the asset for 5 years. Now, I've not used the asset for 5 years. In between itself, I've applied for cancellation. So I have used the asset for 3 years. On the third year end, or say 2 years, 11 months, now that will be equivalent to 3 years itself, because part of the quarter has to be considered as full quarter. So I've used the asset for calculation 3 years. So since I've used it, that much has to be reduced, which means 5% per quarter. In each year, how much will it be? 5% per quarter means for a year, 20%. So 20 for 1 year, for 3 years, it will be 60%. On that 1 lakh, 60% makes it 60,000. So 60,000 is your permitted credit. You have to reverse 40,000, which is the unused years. Okay. So 40,000 is the credit which you have to pay. So that 40,000 or output tax payable on such goods. So if I sell it, what will be the value, market valuation again? And what is the output tax on that? Say if it is 1 lakh itself is the value, 1 lakh was the value, what I bought. Now, when I sell it on that, if I have to charge, say, GST at 80,000. So 80,000 or 40,000, whichever is higher, 80,000 is higher. So I have to pay 80,000. Okay. That is what we have to do a comparison when we go for cancellation of registration. So in case of sale of capital goods or plant and machinery, ITC should have been availed on purchase. So only if you have availed, then you reverse it. If you have not availed, then you don't have to. Okay. Only if you have availed, then you do this. Otherwise, you don't do it. Okay. Tax payable will be higher of the two. ITC taken on capital goods reduced by 5% per quarter of a year or part thereof. Okay. Per quarter of a year or part thereof. Or tax on the transaction value, whichever is higher. Then in case of refractory bricks, in case of cancellation, what do we do? In case of refractory bricks, molds and dies, jigs and fixtures, which are supplied as scrap, tax may be paid on the transaction value and no comparison with input tax reversal. So this point number 2 applies for all capital goods, but there is an exception for these special materials, which are refractory bricks, molds and dies, jigs and fixtures. Why? These are capital goods, but their wear and tear is very much possible that the value is very less there in these goods, which is refractory bricks, molds, dies and dies, jigs and fixtures, because these are all like a capital goods. Like if you have a machinery, you need to do some manufacturing of a particular model. There you'll use a mold and die. So this is a capital goods which goes into the machinery, but it will be depreciation much better. The use of the assets gets reduced before 5 years itself. So it can get used off in 1 or 2 years. So if these are being sold as scrap, then you'll get very less value. Then if you tell me to reverse the input, that will be really incorrect. That's the reason you don't have to do a comparison of reversal of ITC or tax on the transaction value. You remove this comparison and you only pay tax on the transaction value. Clear? So only in these case of special goods, not in other goods. Then what is the ITC which is to be claimed in case of change in constitution? So section 18.3 says when there is a change in constitution of registered taxable person in following cases. Where will there be a change in registered tax, change in constitution? Or when there is a sale, when there is a merger or a demerger, or a case of an amalgamation or leasing out or transfer of business. So in these cases, what do you do? In case of a sale, merger, demerger, amalgamation, lease, or transfer of business, we know all of these terms because we have learned this in accounting, right? In your accounting and in terms of your management accounting, you know what are these things, right? So transfer of unutilized ITC in the books allowed to such. Okay, so the unutilized ITC can be transferred. When I sell my business, in case of the sold entity, this entity which is selling it to another entity can transfer the credit. In case of a merger, the merged entity can claim the credit. In case of a demerger, when one entity is being demerged to various entities, then that new entity can claim the credit. In case of amalgamation, the new entity, amalgamated entity. In case of a lease, the leased entity. And for transfer of business, the transfer business ITC shall be apportioned in the ratio of value of the assets of the new units. Okay. So ITC shall move from, if I sell my business to another business, then the ITC can be moved to the new business. In case of a merger, that can be moved to the, when two entities are merged, A and B are the general examples what we use. A and B are two entities, they're being merged to entity C. So the credits lying in A and B can be merged to C. In case of a demerger, what happens? In demerger, one unit is being demerged to separate units. So A is one entity which is being demerged as B and C. So when it is being demerged as B and C, then new ITC shall be apportioned in the value of the assets of the new units. So will you consider value of the assets only when ITC is claimed or no? No. All the assets. That doesn't matter whether ITC is there or no. Whatever is the total assets which is being demerged, based on the value of the assets of the new units, ITC will be apportioned. Okay. So if one entity has credit of 10 lakhs, right now this has been demerged to two entities. One entity is going and getting 20%, another entity is getting 80%. So you will apportion the credit also based on the value of the assets, not on the value of the consideration. Okay, so you will transfer the credit in case of a demerged entity on the basis of on the ratio of the value of the assets. Okay. Then in case of transferor should submit, that is the transferor who is passing on the credit should submit certificate from a practicing chartered accountant certifying that the sale, merger, or demerger has been done with specific provision for transfer of liabilities. So all the assets and liabilities should be transferred. Just selling of few assets and not transferring the liability, that will not be treated as change in constitution. When the complete business has been sold, that is when the it will be treated as change in constitution. Okay. Then the transferee, that is the transferee who is claiming the credit. How can he claim the credit? By filing something called as GST ITC 02. So once he files this GST ITC 02, the credit which was lying in the previous entity moves on to the new entity. Okay. So that's how the credit transfer happens in case of constitution. Transfer of ITC on obtaining separate registration for multiple places within a state. So what happens? I have taken okay. So basically, the questions are not reaching me. Some people are asking, and I'm not getting the questions. So all your questions, I don't know how will you ask me, but I'll just be proceeding further with the concept. So if you can understand the concept, I think your questions will be answered because your questions are not reaching me yet. Okay. Okay, and come. Okay. So basically, transfer of ITC on obtaining separate registration. Now I had one registration. Now there is an option to take various registration because of, say, there is a new business which I want to start, or I within the same business I want to do a division of separately for wholesale or separately for a retail. Okay, or I want to cater for export one separate entity and for domestic supplies one entity. So I will take separate registration for multiple places within the state. How will I transfer the credit? Because I have transferred some of my business to a new registrant and I'm transferring some assets. Then what happens? The transferor can transfer the unutilized ITC. Because what is utilized is not there with me. So whatever is unutilized ITC, which is lying in my electronic credit ledger, where will my credit lie? It will lie in my electronic credit ledger. So whatever credit you're there in the books, that doesn't matter, because actually what is there in your credit ledger, that is the right credit. So the transferor can transfer the unutilized ITC. The transferor can transfer the unutilized ITC lying in his electronic credit ledger to any or all transferee in the ratio of value of the assets held by them at the time of registration. So whatever is the value of the asset, similar to demerger cases where we have said in a demerger, the value of the assets has to be considered. Similarly, you have to see here also that whatever, when you're transferring to a new entity, to a new registration within the state, you will transfer the credit on the basis of the value of the assets held by them. The value of the assets here also means entire assets, irrespective of whether ITC is availed or not. So you will consider here, there's no confusion. If they would have sold, they would have said that you have to only consider those assets where ITC has been claimed, then there would have been an issue. But you have to consider the value of all the assets. Value of all assets means entire assets, irrespective of whether ITC is claimed or no. What is the assets being transferred to the new unit where you're taking a separate registration? Those you will transfer. Then the transferor shall furnish prescribed detail on the common portal within a period of 30 days from obtaining separate registration. Within 30 days, you will obtain separate registration. Then that new entity has to provide information within 30 days. That's when the credit gets transferred. So same ITC02 will file and get the credit from old entity. The transferee, that is newly registered place of business, shall accept, and the unutilized ITC gets credited. So I will do the transferor. When I'm transferring to a new entity, I will file this statement within 30 days. And once that new entity accepts it, new entity I'm saying because it's a new registrant. So I'll use the word registrant. From the old registrant to the new registrant, the old registrant has to file a statement within 30 days and the new registrant has to claim it. So once he claims it within 30 days, he will get the credit. Okay. Okay, so you can ask me questions. I think if you ask more questions and if you repeat that questions, then I'll be able to see it, because there is questions of other classes which is being clashed. So just ask your questions, and if it is getting repeated, then I'll be able to answer it. Okay, so that is a case of transfer of ITC. Now, how do we utilize the ITC? This is very important. Once you have this chart in your mind, this we have discussed earlier also, but again, I'll refresh this. If you have this chart, then you can claim the credit in this manner. So what happens to my credit lying in my ITC? IGST credit, what is there? I have to first always utilize for my IGST output. IGST, when I say just IGST, it means IGST output tax. So input tax credit of IGST shall be utilized for output tax of IGST. Then whatever is the balance can be used for CGST or SGST in any order. So first exhaust the output IGST, then CGST and SGST. Can this be 10%, 90%? Can this be 50-50? Any proportion you can do it. Not that equally CGST and SGST equivalent. No, you can claim the IGST, whatever is left after paying your output IGST between CGST and SGST in any order. Then that is there. Then whatever is your credit lying in CGST, CGST ITC can be used for CGST ITC can be utilized, should be first utilized for C. So like with like IGST, use it for IGST, then with CGST and SGST. Then second part is CGST, IGST has to be utilized for CGST first, then with IGST. Okay, so CGST, ITC I will use with CGST first and then with IGST. I cannot utilize for SGST because we are clear that CGST credit doesn't handshake with SGST and SGST credit doesn't handshake with doesn't handshake with CGST. So similar of how we have utilized CGST, we will utilize SGST. So SGST, ITC, I will first utilize with SGST output tax, then balance I will utilize for IGST output tax. Okay, so like with like, wherein SGST input I will utilize for SGST payment, and then if there's any balance, I will utilize for my IGST payment. Okay, clear? We'll understand this with when we take problems with some examples that will give you more clarity, but you understand this flow so that it is clear. If this is clear, whatever problems you get, you can easily solve it. Okay. Please repeat works contract point. So in works contract, what we had said is a person who is taking services of a works contract. When will you take a service of a works contract? To construct a building and things like that. So in case of construction of a building and things, we cannot claim the credit because it is being capitalized. So we cannot claim the credit. Generally, other capital goods are permitted, but in case of works contract, we cannot claim it. But if you're doing any small works contract, which you're charging it to your P&L, like small repair services, painting services, renovation services, then we can claim the credit. Other exception in case of works contract is plant and machinery. If you're incurring works contract expenses for construction of a plant or machinery, then that will be that will be permitted. Like I am doing a construction of a building for my office use, I will not get the credit. But I'm doing a construction of a part of a building wherein I have to do cement work for fitting in a lift. Okay, that will be permitted because lift is a plant and machinery. I can claim the credit. Similarly, if a big manufacturer is setting up a warehouse, he cannot claim the credit. But in warehouse, if he's doing any works contract service of installing a oil tanker, okay, that credit he can claim because that oil tanker will be treated as a plant and machinery. Fine. So this is the ITC utilization procedure. Then we'll discuss on, there is some special rule called as Rule 86A. Okay, they have said that some credits cannot be claimed, or basically your ITC utilization will be restricted. In case the government feels that you are not a correct person, your credit can be restricted. The government has been given this power, the authorities has got this power to block your credits. Okay, when can my credits be blocked? In special circumstances, my credits can be blocked when the proper officer or the commissioner has reasons to believe that the credit of input tax available in the electronic credit ledger. So you have already claimed it and the credit is lying in your electronic credit ledger, has been fraudulently availed or is ineligible. Okay, when the officer has reasons to believe, he should not have reasons to only doubt. You see the usage of the words, they've used the words reason to believe. So if they have a strong reason to believe that the credit of input tax available in the electronic credit ledger has been fraudulently availed or is ineligible, then what can he do? He can take base restrictions can be imposed by the commissioner on utilization of the ITC for claiming credit. He can place reasonable restrictions of the credit of input tax has been availed when in what cases, what is fraud, when can he say that it has been fraudulently availed? When the credit of input tax has been availed on the strength of a tax invoice or valid document issued by a non-existent supplier. You have got the credit, you have claimed it in GSTR 2A and things like that, but when the officer sees that the person doesn't exist only, okay, that person doesn't exist only, that a credit is claimed on piece of valid document, but by a non-existent supplier or by a person not conducting any business at the registered place of business. He has given a registration certificate, but when the officer is going to see that place, that person doesn't exist. So either he's a non-existent supplier or he's a person who is not conducting any business at the registered place of business. In that case, your credit will be blocked. Okay, that is a reason to believe. When he has a strong reason to believe that that supplier from whom you have purchased is not existing or is not conducting business at that place. That is one case. Second case is without receipt of goods or services. We know for claiming credit, what are the conditions? You should have received the goods or service, but you have claimed the credit, but you have actually not received the goods or services, wherein the officer has evidence for that. Even in that case, your credit will be blocked. What are the cases? The tax in relation to which has not been paid by the government. So we know that when one of the condition was you will get the credit on a provisional basis, assuming that the supplier has paid taxes to the government. But in this case, where the tax in relation, the government has found that, the officer has found that the tax in relation to which you have claimed the credit has not been paid, or the registered person availing the credit has been found to be non-existent or not to be conducting any business. In such cases, the registered person availing the credit, or I claimed the credit, but I'm not in possession of a tax invoice. Just on the basis of GSTR 2, I have claimed it. Then what happens? They can place a restriction saying that we will not allow you to use the credit ledger. We will not allow you to use the credit ledger for payment of your output tax. So in that cases, what they'll do is they'll tell that your credit will not be available. You cannot utilize the credit. Okay. Ms. Swati Subalakshmi, you're saying you're not able to access live classes through website. Can you please tell which classes you're not able to access? Okay. So in these cases where you have taken credit which without fulfilling any of those 4 conditions, basically, because first is non-receipt of goods. That is one case. Non-receipt of invoices, non-payment of taxes, those 3 cases, because 4th condition is on you that you have to file the returns. So you can file the returns yourself. That will not become a case for restriction. In other 3 cases, right? When you don't have an invoice, you have not received the goods physically, or you are received from a non-existent supplier, okay, or that person has not filed his return. In such cases, what happens? The restriction will be placed. Now, this restriction can be imposed for a maximum of 1 year. Okay, after 1 year, this restriction has to be automatically removed and you can utilize the credit. So for a period of 1 year, your credit will be blocked. So can I utilize it afterwards, sir? Yes, you can utilize it, but still, okay, you cannot utilize it for 1 year. So 1 year, your credit is blocked. Okay, that is Rule 86A, which is very important because it's an amendment which happened in 2021. So we can expect some question from this Rule 86A, saying that what are the conditions basis which your credit can be blocked or your credit can be restricted. Then there is another rule called as Rule 86B, wherein there is a restriction imposed under this also. Rule 86B limits the use of input tax credit available in the electronic credit ledger, wherein they said we will not block your credit, will not restrict your credit, will allow you to use it, but with some kind of caps, saying that you today, what we are telling you is whenever you have output, claim your full input tax credit. But we'll place some restrictions, few specified people, that you should not utilize 100% of your credit. You can utilize only part of your credit. What is that part of the credit? Restriction imposed is the applicable registered person. We'll see who is our applicable person, but this specified applicable persons cannot utilize ITC in excess of 99% of the output tax liability. If you have 1 lakh output tax liability and if you have 10 lakhs input credit, you can utilize it, right? But in case of specified registered person, if you have 1 lakh as output, we will allow you to use only 99,000 of the credit. 99% of your output means on the 1 lakh, we will allow you to use 99,000 only. Even if you have credit of 10 lakhs, we will restrict it that what is your output on that 99% you can claim, and balance 1% has to be paid through cash. Why? Because there is a lot of fake invoices which is happening. So to keep those fake invoices in control, government wants to restrict the credit. So they will restrict the credit for such people wherein your input will be restricted to 99% of your output. So if 1 lakh is the output, 99,000 you can claim the credit, 1,000 has to be paid by cash. By whom? So these are specified persons. The rule is applicable to registered person having taxable value of supply other than exempt supply and zero rated supply in a month which is more than 50 lakhs. So anybody who's having a turnover of more than 50 lakhs, this is the value of the goods or service, not the tax rate, not the tax amount. So if the taxable value of supply is more than 50 lakhs, then this restriction will apply. This limit has to be checked every month before filing return. So if your value is less than 45 lakhs, less than 50 lakhs, which is say 45 lakhs as an example, in 1 month, if it is 45 lakhs, then you can utilize full 100%. This restriction will not apply. If it is 5 lakhs, you can utilize full 100%, no restriction apply. If it is 55 lakhs, then you'll have to see whether this restriction applies to you. Does it apply to all? No, it does not apply to all. It applies to only people which are having a fraudulent thing. But so how do we avoid this? So each year you have to see whether your limit is more than 50 lakhs, then you will fall it. But there is a lot of exceptions. A lot of exceptions are given wherein very few people will get attracted to this restriction. So if persons mentioned below have paid more than 1 lakh as income tax under the Income Tax Act, so basically who's not a non-income tax filer, who's not paid more tax more than 1 lakh, for them this restriction will apply. If you have paid taxes more than 1 lakh, then if he's registered person, if he's a proprietor and he's registered, then if he's paid more than 1 lakh as income tax in the previous year, then this restriction will not apply. Either by the proprietor, if it's a karta, if it's a HF, then the karta, if it's a company, then the managing director. So if a company is there and they want to place restriction, they cannot place a restriction if the managing director of that company has paid income tax of more than 1 lakh. If they're paid income tax more than 1 lakh, they're fine. They're saying, okay, you're a genuine taxpayer. I will not place restrictions for you. Okay. Or if it's a partnership firm, any of the partners or whole-time directors or any other person as the case may be, which means if it's a LLP, then the partners, if it's a AOP, then the main holders of the AOP, if it's a trust, then the trustees, right? Any other person as the case may be means that. So if it's a partnership, then the partners, if it's a LLP partners, if it's a company, then the directors. So if these specified people have paid more than 1 lakh rupees as income tax, then this restrictions cannot be applied. If it's a registered person under concern, or second option, if the registered person under concern has received a refund amount of greater than 1 lakh in the preceding financial year on account of export under LUT or due to inverted tax structure. So you have applied for refund and you have got refund of more than 1 lakh, then also you can utilize full credit. I will not place this restriction on you. Okay. Then what exceptions are given? If the registered person has discharged his liability towards output tax by electronic cash ledger for an amount in excess of 1% cumulatively of the total output tax liability up to the said month. So this month, if I have to see that, yes, I've crossed 50 lakhs, but I have to see previous month whether I have paid any time through my cash ledger more than 1%. So if I have not paid any time 1% and I've paid only through credit, their restrictions will apply. But we have to see other conditions also. Even if I fall under any of those one conditions also, then it's good enough that I'll not fall under this. Okay, any one condition also, if I fall, then that is sufficient for me to come out of the scheme. If a registered person under concern is any of the following, so it doesn't apply to government department, public sector undertaking, local authorities, statutory authorities. These authorities, even if they pay through credit ledger, then also it's fine. There, for them, the restrictions will not apply. Okay, so basically, the restriction applies saying that if your turnover is more than 50 lakhs, then you see. If it is more than 50 lakhs, then you can, in a normal scenario, you have to pay 99% through credit and 1% through cash. But there are very good exemptions wherein you know that your MD has paid more than 1 lakh tax, or if you're a proprietor, you have paid more than 1 lakh income tax, fine, then this rule doesn't apply to you. Or say your return is less than 1 lakh rupees, but you've got a refund more than 1 lakh rupees, then also fine. You don't have to apply this exemption. You don't have to apply this restriction. Or if you have discharged your liability through cash more than 1%, then also this restriction does not apply to you. And if you're specified government undertakings, that's basically if you're a government department or a PSU or a local authority or a statutory authority, then this restriction will not apply. The crux of this rule 86B is basically they want to find out who they will want to restrict credit to those people who are doing fake invoices. Wherein they're saying output is so much, but they're utilizing input and not paying any tax to the government. For them, this rule is there. So how do you come out of the rule? Because everybody, more than 50 lakhs, there are so many taxpayers. They don't want to burden them. That's the reason they've given so much of relaxation. So if you're falling under these relaxations, then you don't have to apply that restrictions and you can utilize 100% of your credit. Now we'll get into some questions and we'll see some MCQs also. Then we'll get into the problem solving. Now, ABC Limited purchased 10 computers for its office for 5,90,000 rupees. which is basically 5 lakh rupees of value, and 90,000 is the GST. They have purchased this on 8th of August 2018. Out of this 10 computers, okay, 2 computers have been put to use and kept for a new branch which is going to be opened in the next 6 months. So they've taken 10 laptops. On this 10 laptops, 8 laptops they'll put it for use, and 2 laptops they'll keep it in their office only. They will tell that we are using it for a new branch which I'll open in 6 months. Can ABC Limited claim full credit of 90,000, or they should claim only for 8 laptops and they have to claim 2 laptops later on? What is your answer? Yeah, can you please respond with your answers? What happens? Should he claim on 2? Okay. 2 computers which have not been put to use in the business, but they are intended to be used. So ITC, we had said that ITC can be claimed on goods which are used or which are intended to be used. So here the intention is to be used for a new branch. So credit on this also can be claimed. Okay. Let's get to the next question, where Manish is a chartered accountant whose turnover exceeds 20 lakhs on 10th August. Okay, and becomes liable to get registration under GST. So we know that compulsory registration is required once you cross the threshold limit. So he has crossed the threshold limit on 10th of August. Now he applies for the registration on 25th August, and he gets the registration certificate on 28th August. Okay, so understand the dates. On 10th August, he crossed the limit. Now he's applied for registration on 25th August. Within how many days he has to apply for registration? Come on, answer. Within how many days should he apply for registration? Waiting for your answer, students. We had said that input tax credit can be claimed by a person who has taken a fresh registration. This is not a voluntary registration. This is a regular registration because he is registered under regular scheme because his threshold limit is crossing. So within how many days should he apply for registration? Okay, I'm not receiving any answers. Maybe you're sending it, but I'm not receiving it. Okay. So a registration has to be applied within 30 days. So On 10th August, my limit is crossing. I should apply within 30 days, which is August mein kitne din hai? Jan, Feb, March, April, May, June, July. August is 31 days, right? So 10th, I cross the limit. So as we had discussed, leave 10th. From the 11th, you have to consider 11th to 31st is 21 days. 21 days for August and 9 days of September. Before 9th September, I should apply. I've applied well on time on 25th August and I've got the registration certificate on 28th August. Now I've purchased one laptop of 47,200 on 16th August. That is after the date when I have to apply, when I cross the limit, but I've applied within time limit. So I have got the laptop on 16th August, where whether I am eligible to claim the credit, I get the registration certificate later on, right? But still, the question is, before obtaining the registration certificate, I have got the laptop. Can I claim the credit? Yes. The effective date of registration will be 10th because I've applied within time. So my effective date will be 10th August. So, and I shall be deemed to be registered from 10th August, even though I got the registration from 28th certificate. The effective date of registration will be mentioned over there as 10th of August. So inward supply I've received after the effective date. So I'll be eligible to claim the credit. Okay. So this was the question on whether to understand that when I apply for registration on time, can I get the credit? Yes. But in this case, if I apply after 9th of September, then that laptop what I purchased, on that I cannot claim the credit. Because if I apply after, say, on 15th September, that is delayed by more than 30 days. So my effective date of registration will be the date when they give the registration. So any past credits, what I have to taken from the effect from when I have to apply for registration till the date I get registration, I will not be able to claim the credit. But what happens to output, sir? Yes, output you'll have to pay, because as and when you cross 20 lakhs, you have to pay output. Input, you don't get it. Okay, that's the flip side. So apply for registration on time. We'll continue with MCQs after a break of 10 minutes. So we'll get back at 7:15. understand basically what is what, so that our queries on MCQs, if it gets resolved, then we can take up questions also and answer it. So when is ITC available if goods are received in lots, whether on receipt of first lot or receipt of last lot, or proportionate to the lots receipt, can I claim it? Or partly I should claim it in first lot or partly on last lot. Say like 10% on first lot and 90% on the last lot. Can I claim that? What is the answer? Go on, quickly answer these questions, because we'll have to move ahead and answer the problems. I have 3 question answers, or more than 3. So based on the time I will take up, if you answer these questions quickly, then we move ahead. What do you think is answer? Is it first lot, last lot, proportionate, or partly? Answer 1 is B. Okay. Last lot. What are other students saying? On C. So few students are saying it is C. Okay. So I'm receiving various answers. One person has said A. People who have given correct answer are Parth Shah, Harsh Goyal, Abhishek, Rekha Kumari, Shivani Singh, Prince Kumar, Tannu, Jay Gandhi. These many answers. Pooja Gajjar has given right answer. Miss Sirisha, Mansa, Preksha Kothari, Gadisiri, Srishti Katuria, Hariharan. Very good. Great. So people, the correct answer is B, last lot. So we have studied that if you have multiple lots which is received, then you have to claim the credit on receipt of last lot, not proportionate credits are on the first lot. You have to claim it when all the lots are received. Okay. So second question, payment of the invoice are to be made within how many days from the date of issue of invoice to claim the credit? Is it clear now? Is it 90 days, 120 days, 60 days, or 180 days? Within what time we should claim the credit? Asra Wasim Ahmed, Rohan Jain are all given right answers. Devendra Kumar Sharma. Pooja Gajjar, yes, I have received Ms. Gajjar Navi Chandran. Your answer is also right. For second question, the answer is very simple. Very simple. Everybody will receive the correct answer. The answer is yes. Come on, send me the answers. Answer is D. Correct. So the answer for second question is D. We should make the payment within 180 days from the date of receipt of invoice. Third one, prescribed limit for making payment does not apply in which cases? So that 180 days payment does not apply in which cases? Supplies on which tax is payable under reverse charge, deemed supplies without consideration, because if there's no consideration, they'll not pay, right? So definitely B is the answer. But what could it be, B or D? Because D says all the above when the addition is made to value of supplies on account of supplier's liability in relation to such supplies being incurred by the recipient of the supply. Okay, so is it B or D? So I'm giving you 50-50 chances also. I've given the answers and I'm giving you 50-50 also. Yes, in case of 2, it is D. Avinash, it is not 90 days, it is 180 days. Hariharan, it is not A, it is B for the question number 2. On question number 3, it is all. So in all of these 3 cases, the prescribed limit of making payment within 180 days does not apply, because under reverse charge, you only are the person who will pay. GST under reverse charge. So irrespective of your payment to your supplier, you will claim the credit only once you pay the taxes to the government. In case of deemed supply, there is no consideration which you're paying. You only pay the GST. So there also 180 days does not apply. When an addition is made to the value of supplies on account of I have discharged as a receiver the supplier's liability, there also I don't have to make the payment within 180 days because I've already made the payment on behalf of the supplier. So answer is B, all the above. Question number 4, a taxable person can be entitled to full ITC in respect of input services and capital goods exclusively used for exempt supply, zero rated supply, taxable supply, or both B and C. Yeah, this is a good question. This is a little tricky question, a typical CA question. Yes, 3, most of the people have given answers correctly. Now 4, give me the answer. I can claim ITC, this we had discussed, right? But I can claim ITC on what all supplies, outward supplies. Is it, or can I claim on full ITC on exempt supplies? Can I claim it on zero supplies, zero rated supplies to be more specific? Zero supplies means zero rated supplies, taxable supplies, or both B and C. Please explain the third exception to 180 days limit. The third exception to 180 days limit is this itself. I've given all the exemptions here also. When addition is made to value of supplies on account of supplier's liability, which means I don't have to pay to the supplier. Supplier is increasing his value because I have made payment on his behalf. Like cement example, he wants to buy cement. Now, when he's supplying that building to me, I have already issued cement to him. But should he not include the cement value in his supply? He should still include. So he will include the value, but I don't have to make payment of that to him because I've already made the payment of that cement to the cement vendor. So that is that exception wherein the addition in value he's making because I have incurred something on his behalf. On that, GST has to be charged, but the value is only addition of value. I don't have to make the payment to him, right? So that's the third exception. Now, question number 4. 4, the answer is D. Yes, everybody's answered that D. Some people have answered the taxable supply. No, taxable supply and zero rated supply, both. Okay, on both of these supplies, you can claim input tax credit, even though you don't pay GST under a zero rated supply, but still credit is available because that's a special supply, unlike a exempt supply. Okay. Next, in which order CGST, IGST can be utilized? The ITC of CGST can be utilized in which order? Is it first you have to pay CGST, then pay SGST, and then IGST? Or is it first CGST, then IGST and SGST? Or first CGST, then IGST? Or first IGST and then CGST? So your ITC is CGST. In what order you will pay? You will claim. Fine. The answer is C. First CGST and then IGST. Correct? Not D. Some people have answered D. No, you can't be D. First CGST. Definitely CGST cannot be utilized with SGST in any order, either first or last. So these two are ruled out. You cannot utilize CGST for payment of SGST. So what you can utilize CGST for? IGST only and CGST. So first you will utilize CGST input with CGST output and then with IGST. Okay, good. Most of them have answered correct answers. Sixth one, which are the taxes to be levied on import of goods? What happens? What all taxes is levied on import of goods? Only IGST is levied, or is it IGST and CGST, or is it basic customs duty and IGST, or only basic customs duty? When I import, what all taxes do I pay? Sir, if I have CGST and IGST ITC and I have to pay CGST, then first will I use IGST or CGST? So good question. In that case, Mansi, first you will utilize your IGST because IGST credit has to be fully lapsed out. So IGST, if you have any IGST liability, you'll pay. Say you don't have any IGST liability, you have only CGST liability. You will utilize your full IGST towards your CGST liability, and then whatever is lying in your CGST has to be utilized. Sixth question. On my import, what all taxes do I pay? C. Most of you are answering C. Yes, and that is right. We'll go with the majority. Yes, on imports, we pay customs duty and IGST, and that IGST is claimable as a credit. Okay. Why somebody has said IGST and CGST? No, you pay only IGST and customs duty. You don't pay CGST on your imports. You pay basic customs duty and IGST on your imports. Question number 7, in which order IGST, ITC can be utilized? For this, I will not read the answers. This is very clear. You can claim it as IGST first, utilize for IGST first, then for SGST or CGST, or IGST, then CGST and SGST, or IGST, then CGST and SGST in any proportion. So you can do any of these possibilities. So for 7, answer is D. You can do any of these things. Okay, 7, the answer is clear. IGST can be utilized in any order. First IGST, then with anything, doesn't matter. Okay, we'll get. Hope 7 is clear that you can utilize for anything. Clear? 7 people have answered only C. No, you can. It should be D because all of the above. All the above is possible, right? Specifically, IGST first, CGST and SGST in any proportion. But this is also possible. A and B is also possible. So the answer is all of the above. A registered person claims depreciation on the tax component. Okay, he claims depreciation on the tax component of the cost of plant and machinery under the provision of the Income Tax Act. The input tax credit on the said tax component, what happens? Is it fully allowed? Is it fully not allowed? Is it partially allowed or none of the above? Eight, the answer is what? Think and answer clearly. He has claimed depreciation. So what happens to his claim depreciation on the tax component? So will the input tax credit allowed, not allowed, or is it partially allowed, or there is no answer itself in this? Correct. So 8, the answer is B. It is fully not allowed because if you claim depreciation on that, then you will not get the benefit of ITC also. So it is fully not allowed because you have claimed depreciation on that. Ideally, what you should do, you should claim depreciation only on the cost of the assets, and on the ITC, you should claim the input tax credit. Okay, whichever way it is convenient for the organization. If ITC is not available, then what they'll do, they claim depreciation on the tax component also. Okay. Question number 9, based on which of the following documents input tax credit can be availed by a registered person, including the ISD person, an invoice, bill of entry, commercial credit note, or only A and B, that is only invoice and bill of entry. Oh, so if registered person has to pay IGST liability along with CGST and SGST, but ITC of CGST or SGST available only, then how to utilize ITSC and what could be the order? Answer, your question is a little confusing. Let me try to understand your question. If registered person has to pay IGST liability along with CGST and SGST, so he has all the 3 liabilities, but ITC of CGST and SGST are available, then how will he utilize? So first he will utilize CGST for payment of CGST. If something balance is left, then he will utilize that for payment of IGST. Similarly, SGST he will utilize for payment of SGST. If something is utilized, then something is left out, then utilize it for IGST. After utilization, if some liability of IGST has to be paid, then he will pay IGST through cash. Okay. Answer to question number 9, very clear that yes, it is D. Answer number 9 is D, all of the above, right? So basically A and B, invoice and bill of entry, you can claim. Commercial credit note, on that basis, credit cannot be claimed. Question number 10, ITC shall not be available in case of motor vehicles for transportation of persons having seating capacity of not more than 30%, 13%. ITC shall be available when they are used for making few taxable supplies. So identify the correct one. What further supply they can do, whether it is further supply of such motor vehicles, such person can claim it. If they're using for transportation of passengers, if they're doing imparting training on driving of such motor vehicles, or all the above. Answer number for question number 10 is D. Yes, all the above. In all these cases, ITC will be available. When you are using that motor vehicle for this particular purpose only, ITC will be available. In other cases, when you are buying it for business, we cannot claim it. Very good. So answer number 10, everybody is answered correctly. Question number 11, a registered person must pay to the supplier the value of goods or supply along with the tax within 180 days from the date of issuance of invoice. This condition is not applicable in much of the following circumstances: when the supply is on RCM and deemed supply without consideration. Addition. So this is basically a repetition of the question itself. So supplies on which tax is payable under RCM and deemed supplies, addition made to the value of supplies on account of supplier's liability in relation to supply being incurred. So this is being same question, put it in a different way. So the answer we know is B, both A and B. Question number 12, time limit for availing ITC is the due date of filing of return for the month of September of the succeeding financial year or the date of filing annual return, whichever is later. Due date of filing of return for the month of September of the succeeding financial year or the date of filing annual return, whichever is earlier, or 31st March of the succeeding financial year, or is it 31st December of the succeeding financial year? MCQ number 11, yes, everybody's answered. And MCQ for 12th question. Well, everybody's answering B. Yes, very nice. Harsh, your question is explain page 6.5.2. I'm not able to get that. What is your specific question? Please answer. Answer number 12, it's B, but be careful. Few people have answered yes. The question for answer for A and B is same, but only the point is whichever is later or whichever is earlier. Okay, so be careful. So it is whichever is earlier when you are writing your exams. Because of time management, you might just be hurriedly writing that, okay, I've seen the question September or succeeding final, whichever is later, I've not seen it. Okay, I'll see this and just answer. No, be careful. Read the question fully, fastly, but read it fully so that you know that yes, there's not one option, there is a second option also. So answer is 12, answer is B. Correct. Okay, so now we will take up few questions and we'll solve some answers on input tax credit itself so that we'll know how to attempt the questions. Okay. Okay. So this is the first question. Mrs. Saurabh G, a registered supplier, supplies the following goods and services for construction of buildings and complexes. Okay. He supplies materials for construction of buildings and complexes. What is his general business? He supplies excavators for required period at a per hour rate. He supplies manpower for operation on a per day rate. He supplies soil testing and seismic evaluation at a per sample rate. Okay. The excavators, what he supplies, are invariably hired out along with operators. So when he gives excavators, along with that, operators also are given because excavators have to be used with special services. So he gives manpowers also along with him. Similarly, excavator operators are supplied only when the excavator is hired out. So excavator operators cannot be supplied just like that. They have to buy excavators with me on hire. Only then I can give them excavator operators also. Now he receives the following services. This is all his outward supplies, clear, and this is his inward supplies. What all he receives? Annual maintenance service for excavators. He receives health services for operators of these excavators. He received scientific and technical consultancy for soil testing and seismic evaluation. So his output services and input services have been defined. Why am I saying services? Because there's no supply of goods in this case. He has only outward supplies and outward services and inward services. For a given month, the receipts exclusive of GST are as follows. So, excluding GST, what all he's received: higher charges for excavators. He's received service charge for manpower supply, okay, of this amount. And for soil testing and seismic, he's received this much. The GST paid during the said month on services are this much, which is annual maintenance charges, health insurance, and scientific technical consultancy. Compute the net GST payable for the given month. Now, assume the rates of GST as are under. As I said, GST rates will be given to you. You don't have to remember the rates. What are the rates? Hiring out of excavators, 12%, and supply of manpower services and soil testing is 18%. But what is this? He's doing higher charges. Yes, on that rate is given. Service charges of manpower also and seismic services, the rate is 18%. So they have given the rate on both, on all the services what is providing. And input also, the rate will be same. So if they're giving the rate on output, that is the rate on the input also. Now, further note what they've given is opening balance of input tax credit is nil. Why that is relevant? Because they will utilize the credit. So opening balance is nil because whatever last month output he had is utilized with his input completely. So output and input is zero. How do we solve this question? We know what are the output services, what are the input services. Now on this, we have to calculate what is the GST payable on output and what is the GST available input. Net will be the ITC. So I'll take you through this. This is the how you will work out. Hope the screen is clear. Yeah, is my screen visible on the question and answer? Word and Excel are visible. Sorry. Okay, fine. Okay. Firstly, so I will go to the point where we have outward supplies. His outward supplies for excavator is 20,25,000. Okay. What is the rate of GST? We know the rate of GST here they have given is 12%. So hiring out of excavators 12%. Then service charges for manpower. How much is the value? Service charges for manpower. The value is 22,500. Okay. So 22,500. I will consider the value for services. On that, we know the rate given is on manpower supplies and servicing, supply of manpower services and soil testing. The rate is 18%. So should I apply 18%? No, because there is a clear remark given here that don't blindly take 18%. They have said in a sentence here that the excavators are invariably hired out with the operators. And similarly, excavator operators are supplied only when the excavator is hired out, which means what? This is an example of a composite supply. So when the composite supply is there, we have to consider the rate of the principal supply. The principal supply here is giving out of excavators. I don't give the manpower just like that. I give the excavators. Along with the excavators, I supply this manpower. So whatever is the rate of the principal supply, that will be the rate for the ancillary supply also. The rate on hire charges is 12%. So for the service charge, the rate will be the same. So for this also the rate is 12%. So this is an example of a composite supply where I give higher charges for excavator and I give service charge for the manpower. So if you are using the excavator, I give the manpower. Manpower I cannot supply separately. So this is an example of composite supply, not a mixed supply. Okay. Had it been a mixed supply, then the highest rate I would apply. But this is a case of composite supply. So in your notes, you'll have to mention that when I give higher charges for excavator, the service charge for manpower is a composite supply. So the rate applicable for higher charges of excavator is to be used. Okay. So I will apply the rate of 12% on service charge for manpower. Then third supply is service charge for soil testing and seismic evaluation, which is 2,81,250. So soil testing and seismic evaluation, the rate is 18%. There is no composite supply or mixed supply. It's a supply individually in itself. So on this, I will apply 18%. Okay. On this 18%, when I multiply, I get these as the value. On this is my GST output tax liability. Now input tax credit, what all I have credit of annual maintenance of excavators. AMC, is it available? Yes. GST is paid and this is the ITC available. Health insurance for these excavator operators, this is the GST paid, but is the credit available on this? No, because on health insurance of any employees, even though they're used for the purpose of business, still credit on health insurance is not available. So health insurance of operators, ITC available is 0. Then scientific and technical consultancy. Okay, scientific and technical consultancy. I am supplying outward supplies and I'm getting the input credit of this. So on this credit is available. Yes, this is the credit available. So my output is 2,96,325. Input is 2,25,000. So input tax net GST liability is 71,325. So here they have not given whether it is interstate or intrastate, and I don't have to determine that. So I don't have to give that bifurcation of CGST, SGST, and IGST. Just mention the GST output and input net. This is payable. Okay. Had they given you if it is intrastate or interstate, then you would have bifurcated that how much is CGST, SGST, and how much is your IGST. Fine. Since here they have not given, so we will just utilize this. Any questions here? So no questions. So it means that you have understood this problem and you have understood the answers also. Very good. Let's get on to the next question then. Okay, just read through this next question. Okay, I don't see any questions coming in. Why health insurance of operators is not included in ITC? Because it's a block credit. So health insurance, we have seen that it's a block credit. So ITC on health insurance cannot be claimed. I will share this question and answer. I'll convert this into a PDF and share this. Okay. So question number 2, ABC Company Limited of Bangalore is a manufacturer and registered supplier of machine. It has provided the following details for the month of November 20. Health insurance of factory employees. This is the details of GST paid on inward supplies. Okay. Health insurance of factory employees, 20,000. Raw materials for which invoice has been received and GST also has been paid for the full amount, but only 50% of the material has been received. Remaining 50% will be received in next month. On the invoice, they have charged GST of 18,000. Then works contract services used for installation of plant and machinery, 12,000 rupees. Purchase of manufacturing machine directly sent to job workers' premises under Challan, 50,000 rupees. Purchase of car used by a director for business meetings only. He's not using it for the personal purpose, but still, whether credit is available or no is the point here. He's using it only for business meetings, 25,000 rupees. Then outdoor catering services available for business meetings. Okay, available for business meetings, 8,000. So whether you will get credit on this or no. Let me share the screen again. Okay, so this is the question of outward supplies. Now, what is the answer for this? Here it is. So these are the question and this is the answer. Health insurance for factory employees, 20,000 has been paid. Whether health insurance of 20,000 is available, ITC of health insurance blocked and hence not claimable. And it is assumed mainly because in case of health insurance, we said it is available if it is obligatory. So here you have to make an assumption because nothing has been specified whether it is obligatory or no. If you make an assumption that yes, it is a factory and it is compulsion, we know that under Factories Act it is compulsion. So you'll maintain that it is obligatory, then ITC will be available. So if you assume that it is not obligatory, then ITC available will become zero. So you have to make assumption some cases. Had they mentioned that yes, it is obligatory, hence they have paid the health insurance, then you have to claim it. So since they have not said anything, I will treat it as it is not obligatory, hence ITC is not available. Raw material purchased, 18,000, but is credit available on it? We have seen a MCQ on this saying that it ITC on receipt under various lots. So only 50% of the material has been received. So can I claim proportionately? No, you cannot claim it proportionately. You have to claim the full credit of 18,000 next month when that balance 50% will also be received. So when that balance 50% received, you claim the full ITC next month, not in this month. Works contract service used for installation of plant and machinery. So it is used for installation of plant and machinery that is permitted. So ITC is available on that. Then manufacturing machine is purchased, but which is sent to job works premises. So this aspect is we have to see that when I claim input tax credit and I send it to a job worker's premises and not receive it at my place, there also ITC is available because under job worker provisions, it is specifically said that when you purchase anything and you send it to a job worker's premises directly, still credit can be claimed by you because it is a case of bill to ship to transaction. So in that case also credit is available, right? So manufacturing machine purchase, 50,000 credit is available. Purchase of car by director, 25,000 is the value. Can I claim credit on this? No, because even first is it is a vehicle with a seating capacity less than 13 people, right? Even though if it is used by a director for using business meetings only, still credit is not available. So car with a vehicle with a seating capacity of less than 13 people, not available. So it is not available. Outdoor catering. They've taken service of outdoor catering only for business meetings. Still, outdoor caterings and food are not a block credit, so credit is not available on them. So you get credit only of works contract service for installation of plant and manufacturing machine purchase. Only on these two. All the other are block credits. Raw material purchase credit is available. It's not a block credit, but you will get a credit only when you receive full goods, so full services, the last lot. So you'll receive the last lot next month. So you can claim it only in the next month. Any questions on this? Okay, 1 minute. Okay. Payment made to travel agency for organizing a free vacation. Okay. So there's a question that says that payment made to travel agency for organizing a free vacation for its best performance among employees. Not eligible for ITC. It's block credit. Yes, it's block credit because travel agency for free vacation for its best performance. So is it a personal nature? I would not say. Okay, so in that case, what happens? What happens if you pay to a travel agent? Is it a leave travel? No, it's not a leave travel. Only in case of a leave travel, it will be exempted. It will be a block credit. Otherwise, when you're paying to a travel agency for boosting the employees thing, it will be available. So it is an allowed credit. Okay, some people are saying we can treat it as obligatory. Yes, you can treat it as obligatory and claim the credit. Okay. Shruti, your doubt is ITC claim from January 2022 when claiming ITC only available to claim in that month and reflected only for plan as filed PSTR within due date. Else the claim is available for the next month. Is this change applicable for questions in our May 2022 exams? No, this is not applicable for you. This is applicable for November 2022 students because all your amendments up till October only is relevant for you. This amendment came later on, so not available for the raw materials after this balance 50%, we can claim the credit. Okay, so when I'm questions मैं दूसरे लैपटॉप में देख रहा हूँ so that हो रहा है ठीक है. We'll go to question number 3 now. ABC Limited, same question with a twist here, wherein we understood basically what credit is available, what is not available. Now they've also given what is appearing in your GSTR 2A, which means we'll have to see Rule 36.4. What happens in case of Rule 36.4 and what are the credits available? Okay, so health insurance of factory employees, same 20,000 rupees. Is it appearing in GSTR 2A? Yes, it is appearing. Raw materials, 18,000. Is it appearing? Yes, it is appearing. Now, labor services, is it appearing? Yes. All the same examples, but additional few points have been mentioned. When in outdoor catering, it is also appearing. Then raw materials purchased and received in this month, 30,000, but it is not appearing in GSTR 2A. Consumables purchased, 30,000 rupees, and it is appearing in GSTR 2A. And GST paid on import of raw materials that is not appearing in GSTR 2A and the value is 50,000. So in this case also, what will be the eligible input tax credit is what we have to find out. So for this, let's do the workings here. You'll have to mention the question, put the tables in a way which makes you easy so that give lot of space and then answer so that if any additional table has to be inserted, that can be inserted. Okay, so first is health insurance. Health insurance, I have assumed here that the credit is not available. So I've not taken the credit because nothing is mentioned here. Okay, but if you people feel that yes, it is for factory employees, then you can say that as per the Factories Act, it is obligatory. So I will claim the credit. You can take that assumption. Here I have not taken it. So GST paid on this, ITC available, not available. Is it claimable? Not claimable. So it is appearing in your GSTR 2A. Why don't you claim it? So to see whether it is appearing in GSTR 2A, before that you have to see whether the GST is available at all. Is it available? It is a block credit, so it is not available. So claimable question doesn't come. Raw material purchase that is appearing in GSTR 2A. How? Because the supplier has issued the invoice. On that basis, he has uploaded already. So that's why it's appearing in my GSTR 2A. But I cannot claim the credit because I've not received the full stock of the goods. So I cannot claim it. Even if it is appearing in GSTR 2A, I cannot claim it. Labor services appearing, yes. GST paid is 12,000. Is it available? Yes. Appearing in 2A, yes, claimable. Manufacturing machine purchases 50,000 available and appearing, so claimable. Purchase of car of director, there we have seen that yes, 25,000 is there and it is appearing in GSTR 2A. Still, I cannot claim it because that is an ineligible credit. So available means whether it's eligible or no. So car purchase is ineligible. Then outdoor catering is also ineligible. So the question of claiming doesn't apply at all. Raw material purchase and received, okay, 30,000. ITC, how much is it available? Available is 30,000, but it is not appearing in my GSTR 2A. So how much should I claim? I will give a note for this and we will come back afterwards, because what is not said, already given, a note is already given here. So once I've given the note, we have to refer to the workings and then decide. So this will be the last item should be considered, not now. Okay. Then consumable purchases, what is appearing in GST 2A, first we claim it. Then what is not appearing, we have a limit. We'll use that limit and see whether we can claim some amount or no. Consumable purchase, 30,000 rupees. ITC is available. Yes. Is it appearing in GSTR 2A? Yes, it is appearing. So I can claim that. Then on imports, 50,000. 50,000 is available. It is not appearing in GSTR 2A. Can I still claim it? Yes, I can still claim it, because on the reverse charge basis, we have said, and on imports, those things will not appear in GSTR 2A, but still you can claim 100% of it. Okay, that's the reason I've claimed full 50,000. Now, all the items I've considered, only this raw material I have to consider how much amount I can claim. To calculate this, I will see what is the total eligible credit appearing in my GST 2A, what is appearing, labor was appearing, manufacturing machinery was appearing, and consumable purchase were appearing. So total of this I will claim, and 5% is the additional cap which I have. So I will claim additional 5% of 92,000 into 5%, which makes 4,600. So up to 4,600 I can claim. So on this, out of 30,000, I can claim only 4,600. Only what is appearing in GSTR 2A and eligible. Like all of these were also eligible. These were also appearing, but it was not eligible. Like health insurance, raw material purchase, repair appearing in GSTR 2A, but it was not eligible credit. So I will not add that for the calculation of 5%. Even imports I will not add, because that is not appearing in GSTR 2A. I can claim it, but for the calculation of 5%, I will not add it. Okay. So whatever is eligible and claimable, on that 5% is available. So of this 5% is 4,600. On 30,000, I can claim only 4,600. So my total credit eligible is out of 1,72,000, not even 1,70,000. Total credits appearing in GSTR 2 is different. 1,72,000 is available. Of that, based on rule 34, we can claim only 1,46,600. Yes, this is like exam question. Exactly. Well, they will twist it, and that is how we. Sir, if you say payment of insurance is one of the terms of employment, then allowable? No. Even if it is terms of employment, still insurance is not allowable. Only if it is obligatory, then it will be available. Obligatory through law, not through your internal document. Say in your terms of employment, will it make it obligatory? No. Obligatory means it should be obligatory by a law. If GST is paid on inputs is also showing under GSTR 2A, then should we also consider? No, because Imports, you will have to always ignore. Imports will not appear in your GSTR 2A. So you should not consider that for the calculation of 5%. I didn't get your point. You said GST paid on imports fully eligible. I didn't understand. Because on imports, even if it is not appearing in GSTR 2A, we can still claim it because the provision of Rule 36(4) gave exception saying that when it is RCM and imports, on that credit will not appear in GSTR 2A, but still you can claim it. 5% wala provision, 5% wala provision is very clear that whatever is your eligible credit and appearing in your GSTR 2A, on that fully allowed because it is eligible also and it is appearing in your GSTR 2A also, that credit is fully available. On top of it, government is saying, okay, some credits is not appearing in your GSTR 2A. I will give benefit of up to 5%. What is the 5% calculated on all the credits which is appearing in GSTR 2A? Of that, only what is eligible, add that. On that 5% I will give you. Let's say on the eligible and appearing in GSTR 2A, we are calculated at 5%. Yeah. Very good. $92,000 calculation you want me to repeat? So how did I get this 92,000? 92,000 I got of the credits which are available and appearing in my GSTR 2A. What all are those? Those labor services, manufacturing of machinery, and consumable purchase, because those were eligible and which were appearing in my GSTR 2A. I'll take that. On that, I have to calculate 5%. Okay. Now we'll get on to next questions. Okay, we'll take a question from one of your previous question papers. So this is a question which says that Star Limited, a registered supplier in Karnataka, has provided the following details for supply of one machine. The list price of machine supplied exclusive of items given below. The list price of the machine is 80,000 rupees. Tax levied by local authority on sale of such machine is 6,000. Okay, local authority is levying something on this, which is 6,000 rupees. Discount of 2% on the list price of the machine was provided, recorded in the invoice of the machine. Packing expenses for safe transportation charges separately in the invoice is 4,000 rupees. Now, Star Limited receives 5,000 as subsidy from an NGO on sale of each such machine. Okay, the price of rupees 80,000 is after considering such subsidy. During the month February 2020, Star Limited supplies 3 machines to intrastate customers and 1 machine to interstate customers. So you know that if it is intrastate, you charge CGST and SGST, and if it is interstate, you charge IGST. Star Limited purchased inputs intrastate of 1,20,000 exclusive of GST for supplying the above 4 machines during the month. The balance of ITC before the beginning of February 2020 was, these was the credits available. Rate of CGST is 9%, CGST is 9, SGST is 9, and IGST is 18% for both inward and outward supplies. All the amounts given are exclusive of GST. Now all the conditions necessity have been fulfilled. Compute the minimum net GST payable in cash. That is the question. So this is a 8 marks question. This is how the question will appear. How calculate the GST minimum net GST payable. Okay. So let's answer this. First is list price of this, which is 80,000 rupees. Okay. So I will take the list price and then 80,000 of this. First, I'll do the valuation on what value, because the same value what I'll swap for one machine has to be adopted for all. First is I'll compute the value. What is the list price? The list price is 80,000. So your presentation is very important. Answer, mention the question number, then tell what are you trying to calculate, and then put the tables. So a good presentation will be really helpful, but for that you need a lot of practice. You need to write on a paper and the question saying that, okay, this type of question comes, I will do this type of column. Similar to how you do accounting questions. Think that if you get a question on accounting, you at least fix down a table that either you'll do a T type of table or a normal table, right? So similar to that, be prepared in your mind, saying that you'll mention this table and you leave a lot of space so that you can add additional tables also. So here we are calculating the value of this supply first. The list price is 80,000 rupees. Tax levied by local authority, because this is not GST. Any taxes levied other than GST has to be added. So tax levied by local authority is added. Then packing expenses. Packing expenses is added to the extent of 4,000 rupees, because packing expenses is charged separately in the invoice, 4,000 rupees. Subsidy from a NGO. Okay, subsidy received from NGO, the price of 80,000 is after considering such subsidy. So since that subsidy received from the NGO, okay, is from a NGO and not from any government authority, so that has to be added. Okay, so since I've received that subsidy, I've reduced the price. That's what they've said, that the price of 80,000 is after considering that subsidy, which means they've given me the subsidy. That's why I've reduced the price, but I have to add it to the value, right? So it is not that they've added, they've just see the word, what cleverly they've used. After considering such subsidy, which means after considering the subsidy, I've reduced the price. Otherwise, my price would have been 85,000 rupees. Now I'm selling at 80,000. Now, since this valuation says that any subsidy you received from a non-government body should be added. So as per section 16.15 valuation, I have to add it. So I'm adding this total. Now, then I have to reduce the discount. The discount, how much I'm giving? 2% on the list price. So even though my total value is 95,000, your discount should not be on 95,000. The discount is always on the list price. And this discount satisfies the conditions of discount, which says that it is recorded in the invoice. It is recorded in the invoice. So this is permitted. So this discount has to be reduced. This is on the list price, which means on 80,000, I have to reduce it 1,600. So this is my value of taxable supply. Fine. Now, how do I do the calculation? I know this is my valuation for all the machines. Now I have to do a calculation. Sale of machine, intra-state supplies. How much am I supplying? Supplied 3 machines to intra-state customers. So 93,200 into 3 machines into 9% each, right? Which makes it 93,500 into 3 into 9% makes it 25,218 CGST and 25,218 SGST. IGST will be 0. It's not applicable itself. And in case of interstate supplies, 93,400 into 1 machine at 18%, which makes it as 16,812. So this is my output taxes, which is payable. Let me, little clear now. So my output tax is this much. Now ITC for set off is how much? I will do the calculation of first, what is my input tax credit? Then I will utilize it. So you'll need to first do a working note, which will show you first what is the computation of ITC. So leave lot of space on the right and leave lot of space on the below, then do the working note, because what all reductions you have to, you don't know, but you don't want to mess it up. So give lot of space and then do the working note. In working note, we'll calculate the ITC. What is the opening balance of ITC? 18,000 CGST, 4,000 SGST, and 26,000 IGST. So this is given to you at the beginning itself. This is the ITC. Now, what have I done in this month? I have purchased 1,20,000 exclusive of GST. Okay, I have purchased inputs of 1,20,000 rupees, which is an interstate supply. It is an intrastate supply, which means the rate is given as 9% for both inward and outward supplies. So 1,20,000 into 9% makes it as 10,800 and 10,800. So I have CGST of 10,800 and SGST of 10,800. Fine. So my total ITC available is opening ITC plus purchases. So this is my ITC which is available. Now this ITC I can utilize, right? So first, what do I pay? First, I claim IGST credit. As we had said, first for paying any taxes, first use the IGST. 26,000 IGST I have. IGST first I will use for paying output IGST. Fine. 16,802 is there. I will utilize from 26,000, 16,802. What is the balance? 26,000 minus 16,812 makes it 9,188. So I can utilize IGST with CGST balance, or I can use it in CGST. But why I have utilized with CGST first? Because I have lot of CGST credit, right? What was the question they've asked? Question was compute the minimum net GST payable. So I have to give the best benefit to the client, right? When a customer comes to you and says, I want to pay less GST, then you will utilize maximum what is possible. I know that I have credit of CGST so much and I can utilize that. So what is the balance IGST I will utilize for paying SGST? And that is permitted because I can use the balance IGST for paying CGST or SGST in any proportion. So I will utilize the IGST first and then use that for paying SGST. So I have utilized SGST of 9,188 because 26,000 was the eligible credit. 16,812 I've utilized for my output IGST. Balance I've used here. Next, I will come for ITC of CGST. So I have utilized 28,800 of this. 25,218 only I can use because my output only is 25,218. I've utilized that. Balance will be the credit which will be available to be utilized later on for the next month. So out of 28,800, I've utilized 25,218. Then SGST, how much a credit I have? 14,800. That I will utilize here, right? Because SGST should be first utilized with SGST, then with IGST. So whatever is balance pending with CGST, can I utilize here? No, I cannot utilize. Cross utilization is not possible. So SGST 14,800 only I can use. Of this 25,918, first 25,218 I've utilized fully. So no CGST is payable. SGST 25,218 is payable. This total of this I will utilize, and then balance payable, which is 1,230. So I have to pay 1,230 SGST. IGST 16,812 fully utilized through credit, so nothing is payable. So what is the minimum GST payable is 1,230. Okay, if I had not utilized this year and I would have utilized year, then this would have been payable. So minimum utilization, minimum payment is my objective. So I will use maximum utilization of the credits, which is permissible. Okay, understood this question and answer? Yeah, in the previous question, if those labor services are not appearing in GSTR 2A, then we shouldn't consider it for 5% credit. Correct. We should not consider. If labor charges GST is not showing GSTR 2A, then of the total credit which is appearing in GSTR 2A, we would have taken 5%. Yes, more questions. Yes, I'll take more questions. I'll take one more question and then we'll take more question in the problem solving. 5% ITC is available. What about remaining ITC? Remaining ITC will claim it in the subsequent month when the supplier uploads it. So each and every supplier you have to actually follow up. If some supplier's credit is appearing in your GSTR 2A, you claim it. For those credits which you have claimed in your books based on other conditions, but it's not appearing in GSTR 2A, you have to follow up with your vendors and tell them to claim it in subsequent month, upload it in your subsequent month. Once they upload in subsequent month, then you can claim it. But you have to reduce the credit what you have already claimed, because 5% buffer what is given, that is a buffer for this month. Next month, when if it is appearing, you claim only the differential. Okay, so if 10,000 not appearing this month, on that you have claimed 5%, then 10,000 when it's appearing next month, you have to again do this calculation and reduce this extra buffer what you have taken. So it's a month-on-month exercise. Machine 93,400. 93,400, we arrived at it because list price is given, then additional taxes levied by local authority we added, other packing expenses we have added, subsidy from NGO we have added, then discount we have reduced. So 93,000 we have arrived on, that is the value which we consider. Yes, I'll upload this question answers. Okay, so you understood this. So working of CGST, SGST, how do you do, and how do you utilize the credit in the best possible manner? Whether ITC is lapsed? No, ITC is not lapsed anything in this question. Whatever is the balance ITC, that will be carried forward. What is utilizable, utilized, balance will be transferred to next month. Yeah. Second question is on welfare association. What happens in case of a welfare association? Okay, before that, we'll take question on reversal of capital goods. 21 and 22. Should I give reason for adding packing charges also, like the way for subsidy is given? Not required, because packing charges, there's no explanation, so not required. For packing for subsidy, it has to be given because there is an explanation required. Yeah, it will be better if I write the answers here, but that will take a lot of time and we need to answer more questions, because if I keep writing it, then it will take a lot of time. So that's the reason I have written it, I have prepared it, and that's the reason I am uploading it here. So once I upload it, once you see the PDF, you work out yourself, you will get to know what are the complications in writing it. Okay, we'll take one question on capital goods. So Classic Textiles purchased a needle detecting machine on 6th July 2017 from Balaji Engineering Works for 10 lakhs, excluding GST, paying GST at 18% on the same. It availed the input tax credit of the GST paid on the machine and started using it for manufacturing of goods. Okay. The machine was sold on 18th October 2018 for 6 lakh rupees, excluding GST. A second-hand machine to AB Private Limited. The GST rate on supply of machine is 18%. Compute the amount payable by Classic Textiles in according with the statutory GST provisions on sale of second-hand machine. Okay, so this is a question on sale of capital goods. Fine. Okay, so this is a case of sale on capital goods. We had said that we have to do some reduction, because on sale of capital goods, what do? You have to compare two things. What is the claim subject to reversal of depreciation, or GST on output tax, whichever is higher has to be paid. So we'll see how this question will be worked out. Okay. So this was the question which I had discussed, that they bought it for 10 lakhs and paid GST at 18%, and now they've availed input tax credit. Now it is sold on 18th October 2018. Okay. So what we have to do is we have to do a comparison of ITC and output tax, whichever is higher has to be paid. So input tax credit taken on the machine, first of all, is how much? 10 lakhs into 18%. Okay. So I've claimed the credit on 10 lakhs at 18%. Section 18. Okay. That's only a reference saying that on what basis I will claim the credit. On 10 lakhs, I've claimed 18%, 1,80,000. Then what we have said, when you're selling a capital asset, you have to compare the input tax with your output tax, but your input tax should be reduced by proportionate credit. How much will be the proportionate credit? I have to reverse the extent of how much I've used. Okay. So for 17-18, how many quarters are there? I've claimed it in July. So July, August, April, May, June is gone. So instead of doing July, August, September, see 12 months is 12 months. So April, May, June, leave it off, balance 3 quarters, right? So 1,80,000, sorry, 1,80,000 into 3 quarters at 5% per quarter. Okay. So 1,80,000 into 3 into 5%. So I will reduce that much. Then 18, 19, how much I've used? April, May, June, July, August, September. Okay. For 18, 19, I've again taken 3 quarters. So for 18, 19, part of the quarter has to be left out. So it was sold on 18th October. So 18, 19, 3 quarters, again 27,000. Okay. So 54,000 I will reduce. The amount as per ITC is how much? 1,80,000 minus this depreciation, which makes it 1,26,000, or the tax on transaction value, which is 6 lakhs. I'm selling it for 6 lakhs, 6 lakhs at 18%, which makes it as 1,08,000. So how much is the amount of GST payable? 1,26,000 or 1,08,000, whichever is higher. Okay. So 1,26,000 is payable in this. Clear with this? Since few people did not see the question, you can see the question and the answer. The other way to work out is from date to date, saying from 6th July 2017 to October, how many quarters? So it will always come as 6 quarters. So based on that, you can do the calculation. Either way is possible. In 1819, why have we taken 3 quarters? Because even part of the quarter has to be considered, right? So 1819, April to June is 1 quarter, April to June, July to September is 2nd quarter. And from 18th October till December, we have to consider, even though it is used for 18 days, part of the quarter is also considered as a full quarter. So we have to consider full quarter itself. So 1819, we have considered 3 quarters. Great. This question is also clear. Very good. So any other questions, please let me know. We'll take up other questions. It will be like a kind of revision of whatever we have worked out and we will discuss. So here we have discussed mainly on ITC and we have started with reversal of ITC or transaction value, whichever is higher. Most of the questions is on ITC. We'll take some questions on composite supply, transaction value and things in the next one, and we'll cover up all the things what we have taken up. Then in respect of ITC on capital goods, what do you mean by either claim ITC or claim GST component? It means when I'm buying a capital good, he will charge me GST. So I can claim the GST, or if I don't claim the GST, I can claim depreciation on that. So you cannot claim both. If you're claiming depreciation on the tax value, don't claim input tax credit on the tax value. So if you're claiming tax benefit of GST, on that portion, you cannot claim depreciation. So you cannot claim both the benefits. That's where the provision says that when buying a capital goods, claim either ITC or depreciation, but don't claim both. Great. Now it is easy to understand and apply the concept. That is the main intent. Once you've understood theoretically, then you can apply this practically. But your theory has to be strong. That's the reason we had discussed so much on the difference between GSTR 2A and GSTR 2B. GSTR 2A is relevant for you, not GSTR 2B, because GSTR 2B effectively came from January. So GSTR 2A is a dynamic document saying that if anybody uploads your his sales for that month, it will appear in that month. So July 2021, if I purchase something, it will appear in my July 2021 GSTR 2A. But if somebody is uploaded of the July lately by December, that also will appear in my July to GSTR 2A. So if you see your GSTR 2A, it can be lower for 1 month. It will be increased when you see it in the next month. So GSTR 2A is a dynamic document. It will keep changing. But GSTR 2B is a fixed document saying that whoever is uploaded in this month, that will appear in this month. For next month, it will be different. It will not change the previous month's GSTR 2A, 2B. So GSTR 2B will be fixed. GSTR 2A will be changing. So when you're claiming ITC, you have to see the GSTR 2A of that month. Later on, if you see it gets changed, so whatever is different, you'll have to add it in the subsequent month. So that's a practical difficulty. To do away with it, GSTR 2B came in from January 2022, but that's not relevant for you. So you have to look into GSTR 2A itself. What we are going to do, we are going to pay GST on the transaction value. So we are seeing that whatever is the transaction value on GST. Can we use 9 months instead of quarters? calculation is quarters. So 5% is per quarter. That's why you use per quarter, because if you use months, then per month, what is the rate? We don't know, right? Then you'll have to break it 5% divided by 3 and it will come a decimal value. So always use quarter, because depreciation benefit will be more beneficial when you use a quarter, because part of the month also will be considered as a complete quarter. So use quarter itself. Previous question, if tracking is secondary and not primary, then it is still it will be added because you're charging something extra for that. So if you're charging extra, if it is primary or secondary, still if you're adding a separate value for that, you will still add it in your valuation. From here, the question is to be taken. Your BOS study material is very good, and you will have suggested questions which will come in suggested answers. So use that and do a lot of workings and see. Try to identify more and more problems, more and more questions. That will be helpful. You have some questions given by private institutions, like what are the various model question papers. Take those questions and solve it. Take some good materials, good study materials apart from Board of Studies. See other books. I mean, understand the concept from here, but see questions from other books. There are various authors. Take those authors' books and solve a lot of questions so that you'll get more and more practice in this subject. Okay, last 1 minute. If you have any questions, please ask. Very good. A lot of people are clear with the concepts. That is where is the thing. After you apply the concept on this practical questions, because I've seen previous questions, there are a lot of theoretical questions also. So if you're clear with theory, then application becomes easier. So understand and the concept and understand the theory also very much. These questions, what I've taken are from various sources. So you can take these questions and see the answers. Okay, thank you very much. So Saturday we have a session when we'll take all problem solving sessions. So if you have any questions, you can ask, and I will take a few questions and I will answer them. So there'll not be MCQs, there'll be proper question and answers for you to solve it.